Hello, all, and welcome back to another episode of the Fintech Diaries. If you're tuning in for the first time, welcome. If you aren't aware of who I am, I'm one of the recruitment consultants here at MCS Group, and I specialize in financial technology. I suppose like really getting ingrained with the communities that we operate in is really important to us here at MCS. Over the last while, I've been meeting with senior leaders of fintech organizations, essentially to talk about their journeys so far. Today, I had the pleasure of meeting with James Jackson, the founder of Bumper, has just achieved an astonishing 50 million in Series B funding. I'll not spoil it all, and I'll let him tell you all about this coming up next. Good afternoon, James. Thanks very much for coming on.
Hi, Jack. How you doing?
All good, all good. I suppose question one, before we get into learning, more about Bumper, etc. I mean, do you mind giving everyone a bit of a background about yourself and your journey into tech?
Yeah, absolutely. Probably quite an unusual journey, actually. I started at university in ancient history, so not many tech people kind of started their academic life there. And then I joined an accountancy firm called RSM, kind of a global accountancy firm, and kind of the grad scheme there to qualify for my ACA accountancy qualifications. So it's predominantly audit, and yeah, I must admit the kind of first year and a half wasn't loving the actual auditing. I mean, it's kind of for those of you who haven't done auditing, it's as dull as it sounds. But what I really enjoyed was going into these businesses and learning about them, and I found that element much more interesting than the actual tests and all the kind of quite repetitive things involved in auditing. And being truthfully honest, I'd failed a couple of my exams. I passed quite a few, but I thought this could be a bit of a long journey doing something that I wasn't loving. So after about a year and a half, 2 years, I dropped out and did a bit of a pivot and moved into product and marketing, digital marketing roles.
Okay.
Worked for a couple of tech businesses there. So I was working for Betfair, which was one of the early, I think they were the first betting exchange. So kind of quite a big innovation from traditional kind of gambling. And yeah, started doing quite a lot of digital marketing there, helping them scale, which is really exciting. So I was involved in SEO, PPC, affiliate marketing, partnership stuff. And then a couple of us, probably about 6 or 7, were approached to leave there and join a new fintech startup, which is called Wonga, which for those who kind of know the business, kind of quite controversial in many ways. They were, I think they were your first fintech unicorns kind of back in the day. Grew incredibly fast, but kind of probably fell on the wrong side of the regulators for a few things. So it was an amazing place to kind of learn a lot of the good things of scaling a fintech, and using big data to underwrite and things like that, and creating a really seamless customer journey. But also it learned kind of what not to do as well. Kind of, you don't want to get on the wrong side of the regulators, and you ultimately want to make sure your product is helping customers. And I think probably the way the business was structured about all out growth and not necessarily putting the customer at the heart of that, and letting customers roll over loans and take loan after loan after loan, which ultimately wasn't sustainable. So I think that was a really great learning for me there. And while I was there, I helped launch a product called Pay Later, and this is one of the early buy now pay later businesses or products. And this was before Klarna, actually, or certainly Klarna might have been launching in Sweden, but wasn't operating in the UK. So the product was great, but by that time the Wonga brand was a bit toxic, and that really kind of held it back. So I really saw the potential of buy now pay later. This is kind of back in 2011-ish, 2012. And really the kind of light bulb moment for Bumper came when I met a chap called David Mail, who was head of innovation at Peugeot Citroën. We just got talking, and he had been doing some, and he'd worked out they were losing about £1 billion a year from identified repair work that wasn't getting sold. And that was the kind of light bulb moment going, hang on, this is perfect for buy now, pay later. and it was a niche, but a big niche. I mean, the automotive repair market in Europe is worth about £300 billion. So yeah, I felt that we could come up with a business that could solve this problem, and become a very sizable business. Hopefully one day a multi-billion-pound business, but in a niche where there's probably less competition and more drawbridges, if you like.
Excellent, fantastic. So let's talk about Bumper then. Walk us through, I suppose, the sort of core business model, etc., and then just was the journey to raising 50 million. Was quite incredible.
Yeah. Well, we started. The core business was exactly what, as I mentioned right a few seconds ago. It was about solving the problem that car dealers had, but it's also as big a challenge for the customer. People don't want to drive unsafe cars, but a big number of people don't say yes to all the safety critical work, and that's simply because they don't have the money. Who saves up for a gearbox just in case it goes? Who even knows the cost of a gearbox? I mean, I probably don't. So when people suddenly get this this repair work found or discovered, it's very stressful, and it's not a pleasant experience, particularly if you don't have the cash available. So your choices are simply: do you drive away in an unsafe car because you can't afford it, or do you get credit cards or payday loans or overdrafts or personal loans? Kind of all very expensive options. So really, Bumper helps by alleviating that stress. Within a couple of clicks, you can be approved for finance. It's completely interest-free for the customer. They never pay interest. It allows them to spread the cost. So it's very similar to kind of the Klarna of the world, but we're 100% focused on automotive, particularly repairs. So if you have a £600 repair bill, you could maybe pay £100 a month interest-free. So it means that customers say yes to more work, and at the same time that they're driving away in a safe car, without the stress of having to find a lot of money up front on that day. So that's growing really well. We had like steady growth up till COVID.
Okay.
And then it fell off a cliff because all our dealers shut down for a few months. So pretty terrifying moment, like it was for many businesses. But then actually COVID was a bit of a catalyst for an acceleration in growth for us, because I think dealers realized that they needed to be digital, and having purely offline experience wasn't that efficient. So with COVID and the in and out of lockdowns, they all realized they needed digital solution, and our BNPL product is primarily digital. So when a customer is sent the repair bill online, through our embedded integrations, you can approve the repair work, and within a couple of clicks, approve the repair work and then spread the cost. So it means that the dealers get the work approved faster. So it means that if the car's on a ramp, it doesn't have to be taken off to wait for the approval. It can get done straight away. And then it also guarantees the dealer, because we pay the dealers up front and take all the risk. So it just means that they get approval much faster. And of course, it's fully digital, so you don't need a big team of people ringing up customers 20 times to get hold of them.
Yeah.
So that digitalization really helped. And then I guess the next kind of pivot for the business was, and this is kind of around the time when we closed our Series A, which was about £26 million round with 21. And what we kind of thought was, now that we're embedded in the software of a dealer, we've done about 60 integrations now. We're like, well, why should we stop at buy now, pay later? Why not do card payments, credit card, debit card, Google Pay, Apple Pay? We launched open banking payments, so account-to-account payments. So we kind of moved away from just BNPL, and we became a whole payment platform. And that, again, made it so much easier for the dealer to do an integration with Stripe, Adyen, Klarna, all the different providers. Just one API, one integration takes, an experienced developer, a matter of hours to integrate. And then it meant all their reporting is in one space, or one platform. So they're not having to log into these different systems. Everything is reconciled into the dealer management system. So all their accountancy software is updated instantly as well. So again, it saves huge amounts of admin time for the teams and these dealers. And then we kind of went one step further just before our Series B. Well, actually, if we're offering all these different payment types online, why not do it in store as well? So we launched the Bumper Pay Pad, which is a card terminal, a PDQ machine. And I've not mentioned this, but we're predominantly franchise dealer based. So very premium brands, very tight restrictions on the look and feel, marketing or technology systems they have. So we made this completely bespoke for each of the brands. So if you're an Audi dealership, you can have a fully Audi branded PDQ machine for pay now, pay later on it, open banking, instant bank transfers, and kind of normal card payments as well. So, and again, all of that is fed into our payment platform. So all the reporting is in one place, and everything is reconciled in the DMS. All quite niche, but if you're a dealer, incredibly valuable. And yeah, after our Series A, with the additional funding, we launched into a number of new markets. So we were just UK based. We then launched in Ireland as a bit of a test bed to see if we could do it, in a different currency.
Okay.
That went really well, and it's still growing really well today, which is great. And we've since launched in Germany, Spain, and the Netherlands as well.
Wow, some journey, amazing. In regards to technology, in terms of the technology that's instilled into the business, could you shed some light into perhaps, some softwares or tools or maybe programming languages or even projects that, your tech team would primarily work on then?
Yeah, we kind of our website, like most modern businesses nowadays, kind of is all in the cloud, web services, and it's made up with our backend services, which are written in Python and Django, framework wise. And then front end is written in React and Next JS framework. So it's all the most kind of modern, very up to date, secure, scalable, and ultimately, as we've launched recently, our marketplace is very SEO friendly as well. So we have a B2C offering, which super important that we're ranking as high as we can be. And I guess like most other businesses, very focused on improving the experience, continuously optimizing, A/B testing the journeys we have, but also ensuring that we have secure frameworks, secure infrastructure. Hacking of a problem in the automotive industry. Fortunately, we've not been targeted too much. We definitely have been targeted, but fortunately, we've never had any data breaches or anything like that. So, that's been a kind of a fundamental part to make sure that we're stress testing the systems as regularly as possible as well.
Excellent. Look, final question from me. I suppose, do you have any other advice for other individuals that are perhaps in a startup or looking to start a business, maybe based on some of your own experiences?
Well, I guess like a lot of founders have certainly made a lot of mistakes. We've been going for about nearly 10 years now. So yeah, so it's certainly been lots of mistakes. I think if I was to go back and give myself advice at the big kind of on in the journey, I think being used to rejection is pretty important, because if you're trying to get VC funding, you're going to have a lot of rejections. I think our Series A and B, we're probably averaging around 100 no's before we got term sheets. So you need to have that that kind of determination, that resilience, that when you have a no, you can pick yourself up again, and an hour later, much enthusiasm as you did the previous one. So I think having that resilience is super important. I think being humble is important, because you can get a bit ahead of yourself. You can suddenly you have a Series A and suddenly feel like you have a lot of paper wealth, but not actual wealth, and it could well be worth nothing, in a year or two's time. So, I think it's important to stay humble, keep you kind of don't start to build an ego and believe any of the kind of the hype you hear, because things can turn south very, very quickly. And as we've seen with COVID and the challenges with fundraising, and I guess on a fundraising point, I think we were right to raise much earlier than we needed to for our Series B. So I would, again, a big tip for me or a bit of advice would be to raise money before you need it. We had a few instances where we're running out of cash quite quickly in the early days. Something goes wrong and people pull out. You don't want to leave yourself a short runway.
Okay.
And actually, the longer that runway is, the more bullish you can be in your negotiations. So we probably had 18 months of cash left when we closed our Series B. So I had a really long runway, and it just meant that you're going into these negotiations with confidence, and you're not kind of being allowing VCs. Most VCs are great, but I think certainly some will try and prey on the weaker startups. Slow the clock down, delay until you're desperate, and then drop that valuation. So yeah, I mean, a lot about that, and then I think also it's really important to kind of ask for help. Going back to that humble point, no one knows everything. There's always someone who has experienced what you're going through before. So kind of surround yourself with other founders. I mean, I find some of the best therapy is having a beer with another founder who's going through the similar thing, or team, or board challenges. So certainly with that, and then I think having a strong board who you trust, who again having an operator or maybe two operators who again have been where you are, or a few steps ahead of you, I think it's really helpful. We've got a great board. A couple of VCs are on our board. We've also got the founder and ex-CEO of Carwow. So he's, I think they're probably at Series E or something. So they're quite a few steps ahead of us. So really, really valuable to speak to him. Then I think the final one is probably trusting your gut and being afraid to make decisions. And I think people can be afraid of trying to make the perfect decision and delaying and delaying and delaying, and then ending up never making that decision. I think you're better to make decisions quicker. And if it doesn't work out, you can learn from that. But you're better to make a quick decision than sitting on things for months. So yeah.
Excellent. No, great advice. Look, aside from that, I just want to say thanks very much for taking the time this afternoon. As always, I'll be tagging you in the video, tagging the business, and also posting links to your website and stuff into the comments so people can get another look. But aside from that, listen, thank you very much.
Yeah, thanks, Jack. Really appreciate it. Thanks for having me on the podcast.